Thank you for joining us at xm.com for today's market comment by Rafi Boyadjian. I'm Maria Bashir. Markets whipsawed on Thursday after the US Consumer Price Index rose more than expected in September, dashing hopes that the Fed is done hiking rates. The CPI measure of inflation edged up 0.4% month-on-month, beating forecasts of a 0.3% increase, while the annual figure was unchanged at 3.7% instead of easing to 3.6%. After a string of not-so-hawkish remarks by Fed officials over the past week put a stop to the relentless rally in Treasury yields, the latest CPI report was a stark reminder to investors that the risks to inflation remain to the upside. Market expectations for one more rate hike in the coming months rose to around 40% in the aftermath of the inflation data, before easing slightly. Still, with rate hike odds having fallen to below 30% in the run-up to yesterday's numbers, the moderate repricing in futures markets was enough to spur significant moves in bond and FX markets. The yield on 10-year Treasury notes jumped more than 15 basis points on Thursday, fueling gains of around 1% for the US dollar. One of the worst performers on Thursday was the Australian dollar, which tumbled by about 1.5% as risk-on sentiment took a blow from revived Fed over-tightening fears. The Aussie, as well as its Kiwi counterpart, remain under pressure today, following subdued data out of China. Both producer and consumer prices in China increased by less than forecast in September, suggesting that the recent stimulus measures have done little to boost domestic demand. Oil futures shrugged off the sluggish data to rally more than 2% after Washington imposed sanctions on two shipping companies for breaching the $60 price cap on Russian oil. Gold, meanwhile, resumed its climb and is set for its best week since March, with yesterday's decline on the back of the rebound on bond yields proving to be just a blip. Ongoing tensions in the Middle East are likely keeping gold elevated as Israel is intensifying its assault on Gaza following last week's attacks by Hamas. In equities, a negative close on Wall Street yesterday weighed on Asian and European markets on Friday. The focus now is on the Q3 earnings season, which is set to kick off today with the big banks. Thanks for watching today's market comment here at xm.com.